We've just put out our latest Property Pulse, which is an update and outlook on all things for the housing market and mortgage rates in New Zealand. Of course, it comes hot on the heels of the Reserve Bank starting to lift the official cash rate earlier this month. That move didn't surprise, so we haven't been forced to make any big changes to how we're seeing things for this year. We still think we'll get at least 2 more official cash rate increases this year of the available 3 meetings, and then a steady pace of increases through the first part of next year, assuming our view of the world is roughly on the money. That would see mortgage rates continuing to lift from here, that outlook. Although one thing we note in the report is that the market already prices in and expects a further 5 hikes in the official cash rate from here, which will limit how much further retail rates rise, probably concentrates more of those increases into the shorter terms. On the housing market, still pretty slow and low out there. We haven't changed our expectation that house prices finish 2026 pretty much flat on last year, although probably a higher chance we think of an undershoot of that flat forecast than any overshoot. Now, one thing we've spent a bit more time on in this report is kicking the tires on forecasts for next year. It's only 5 months away now. We're expecting a little bit more momentum in housing demand as we move through to next year, but with a bit of a reshuffle in terms of what's driving that. So interest rates are moving from a mild tailwind to a mild headwind, but some of the other factors we think about in driving demand should move into a slightly more supportive stance. So that's the economy starting to improve, population growth still quite low, but starting to lift or lifting further as we go through into next year, and eventually the labour market starting to firm as well. So a little bit more demand. Nonetheless, the big story in the housing market really for probably the past 3 years has been the supply response. And to us, we think that pipeline of supply still looks pretty solid when we look out over the next couple of years. That leaves us forecasting just a small 3% lift in house prices for next year. Lots of uncertainty about the exact number, of course, but if it's sort of in the ballpark, house prices would end next year still about 10% below the peak back in 2021. So for more info and the details, have a look at the full Property Pulse report.